Not long ago, this stock was trading at nearly $40 a share. Today, it is sitting at $1.10. Same company, same gas reserves, same infrastructure, completely different world. The company is Gazprom, ticker OGZPY. And right now, it might be the most controversial stock on any public exchange. Is it a hidden opportunity that the market has completely mispriced? Or is it a value trap that could quietly go to zero? By the end of this video, you will have a clear, honest answer to that question. Stay with me. Like and subscribe for more undervalued stock breakdowns every week. I am not a financial advisor. This is not financial advice. Always do your own research. Let us start with what this company actually is, because most investors outside of Europe have no idea how big this thing was. Gazprom is Russia's state-controlled energy giant. It does not just produce gas. It owns the pipelines. It owns the storage. It handles exploration, extraction, processing, and delivery, all under one roof. At its peak, Gazprom was supplying roughly 40% of all natural gas consumed across Europe. Not just a little, almost half of a continent's energy came from this one company. It also has an oil division called Gazprom Neft. It generates electricity. It even owns media assets. But gas is the engine. Gas is everything. And for decades, Europe was completely dependent on it. So what happened to this empire? And why is the stock frozen at $1.10? In 2022, Gazprom had the single best revenue year in its entire history. Gas prices across Europe exploded. The company brought in over $130 billion. Record profits. Record revenues. But that was also the year Russia invaded Ukraine. And everything changed overnight. By 2023, Europe had started cutting its dependence on Russian gas at a speed no one expected. Revenue dropped sharply. And for the first time in 25 years, Gazprom posted a net loss. Not a small loss. A loss equivalent to roughly $7.5 billion. The company that once controlled European energy was suddenly bleeding money. Now here is where it gets interesting. In 2024, just 12 months later, Gazprom swung back to a $15 billion profit. Revenue climbed 25%. Operating cash profit jumped 76%. The turnaround was faster and sharper than almost anyone predicted. From a $7 billion loss to a $15 billion profit in 1 year. And yet, the stock is still at $1.10. So why is the market completely ignoring this recovery? There are 6 specific reasons, and one of them is something most retail investors never think about. Reason 1: Western sanctions. After the invasion of Ukraine, the US, EU, and UK imposed sweeping restrictions on Russian assets. For most Western investors, buying anything connected to the Russian government is either restricted or carries enormous legal and reputational risk. Reason 2: Gazprom lost its most important customer, Europe. The continent that once relied on Russia for nearly half its gas has now restructured its entire energy supply chain around other sources. Qatar, Norway, US LNG. That market is gone. Not paused, restructured. Reason 3, and this is the one most investors miss: the OGZPY ticker you see on your screen is essentially a ghost. It is an American depository receipt, meaning it represents shares of the Moscow-listed stock. But most major US brokers have suspended or restricted trading in it. The price you see quoted? It is largely an illiquid over-the-counter number with almost no real volume behind it. You cannot simply buy this stock the way you would buy Apple or Chevron. Reason 4: dividends have been completely suspended since 2022. Zero income. For income-seeking investors, this stock does not exist. Reason 5: debt service costs have quadrupled in 5 years. Russia's high interest rate environment is making it dramatically more expensive for Gazprom to carry its existing debt load. And reason 6. The Russian government controls this company. You are not betting on a board of directors focused on shareholder returns. You are betting on the decisions of a government at war. But here is what most investors are missing. Despite all of this, the company still has $12 billion in cash and its debt ratio is actually improving. How is that possible? Think of Gazprom's balance sheet like a very large house with a very large mortgage. The mortgage is real and it is heavy. Total debt sits around $80 billion. But the house itself, the reserves, the pipelines, the infrastructure, is worth far more than what is owed on it. Here is the important part. The debt-to-income ratio actually improved significantly in 2024. The company is generating enough cash to service its obligations without stress, for now. And it is sitting on roughly $12 billion in cash reserves. That is not a company on the edge of collapse. That is a company under political siege. As for traditional valuation, price to earnings, price to sales, those numbers are difficult to calculate meaningfully here. The stock is not trading in a normal market. What we can say is this: on a pure asset basis, Gazprom's infrastructure and reserves would suggest the current stock price is a deep discount to intrinsic value. The question is whether that value can ever be unlocked. And that answer depends entirely on what happens next. Because two very different futures are possible, and they lead to very different outcomes for this stock. Before 2022, Gazprom had no real competition in Europe. It was the supplier. Everyone else was secondary. That world no longer exists. Qatar has stepped in as the dominant gas supplier to Europe. Norway expanded its pipeline capacity. American LNG exports surged. Shell and Total Energies are both moving aggressively into the markets Gazprom once owned. Even inside Russia, Novatek, Gazprom's domestic rival, has quietly been building out its own LNG capacity throughout the sanctions period. The market Gazprom lost was not just a customer. It was a structural advantage built over decades. Rebuilding it, even partially, would require years of geopolitical change and a level of European trust that does not currently exist. So what could actually move this stock higher? There are two real catalysts, and one of them almost nobody is talking about. The first is China. Gazprom's Power of Siberia pipeline to China is now running at full capacity. A second eastern route is in development that could add significant new volumes. Central Asian countries like Kazakhstan and Uzbekistan are also buying more Russian gas. This eastern strategy will not replace Europe in terms of revenue. European contracts commanded premium prices. But it does give the company a functioning revenue base. Analysts project another 10% revenue growth in 2025 from this pivot alone. The second catalyst is the one nobody wants to say out loud. A peace deal between Russia and Ukraine. If sanctions were lifted, even partially, if Europe's political calculus shifted, if energy prices stayed high enough, some of that market could come back. That is speculative. That is uncertain. But it is also the reason some contrarian investors are still watching this stock at all. Would you take that bet? That is the question. Let us put both sides on the table clearly. The bull case says this. Gazprom just generated $15 billion in profit. Its reserves are unmatched. Its infrastructure spans thousands of miles and cannot simply be rebuilt by a competitor. The stock is trading at a staggering discount to any rational measure of asset value. If the geopolitical environment shifts, if sanctions ease, if a peace deal happens, this stock could be repriced at multiples of where it is today. The assets are not gone. The world still needs gas. And right now you can buy this company for almost nothing. The bear case says this. Europe will never go back. That is not just politics, It is infrastructure. The continent has spent hundreds of billions of dollars building terminals, signing new contracts, and making Russian gas structurally unnecessary. The Financial Times projected Gazprom could lose the equivalent of $179 billion over the next decade from that lost market alone. Dividends are gone. The government controls the stock. And even if you believe the thesis, you probably cannot buy it through your broker anyway. Both cases are logical. Both are real. And the truth is, nobody knows which one wins. This is where it gets emotional for investors. Because sometimes the hardest part is not finding the opportunity. It is deciding whether the risk is worth taking. So here is the honest summary. Gazprom at $1.10 is not a traditional investment. It is not a dividend stock. It is not a growth stock. It is a geopolitical bet, one of the most unusual and high-stakes bets available in any public market right now. If you believe the sanctions are permanent and Europe never looks back, stay far away. The bear case is strong and the risks are real. If you believe that energy economics eventually override politics, that the world has a history of resolving even the most painful conflicts, and that these assets retain their underlying value, then there is a thesis here. A speculative one. A risky one. But a real one. The key is knowing exactly what you are doing before you do it. Could this $1.10 stock ever see $40 again? I want to know what you think. Drop your answer in the comments right now, bull, bear, or completely staying away. Let's debate it. If this breakdown was useful, share it with someone who follows energy or geopolitical investing. And if you are not subscribed yet, hit that button. We break down stocks like this every single week. See you in the next one.